Hi, morning traders. Welcome back to Morning Cup by 8. Happy Friday. Right. So looking at the S&P 500, it shook off the early session drop on Thursday, reversing the intraday losses to climb around 0.58% and secure its new record close of the year. Right. So I think the AI growth engine was supercharged by the Snowflake, which surging by around 37% after a blowout quarterly report and also a massive 6 billion enterprise AI partnership with Amazon. Also, Microsoft was pushed higher on the news of deploying its own in-house AI models as well. But I believe the drive here is by the cruise extension. WTI crude plunged below the $90 per barrel to its lowest level in nearly 6 weeks, right? So this sharp decline dragged down the energy yields and also significantly deflated core inflation anxieties, giving the equities a green light at this juncture. So looking at the China E50 futures, well, it edged lower by 0.6% on yesterday's session, facing a mild pullback as mounting trade tension with the Europe overshadow the positive domestic data. The overall sentiment took a direct hit after the European Union um, announced plans to systematically broaden the import quotas and tariff on Chinese goods. This target on the chemical, metal, and also the green tech sector. I believe, just right after that, Beijing immediately fired back, right, warning a sharp retaliatory response, which triggered quickly the risk of selling. However, I believe that the overall sentiment remains positive, which may add another leg of movement to this China A50 futures index, right? Looking at the WTI crude oil futures, it finished slightly lower on Thursday session, slipping around 0.98% to settle at $88 per barrel as the market experienced a high volatile tug of war session. Well, early in the session yesterday, the oil sparked over 3%, on alarming reports of direct military airstrike between the US and also the Iran near the Strait of Hormuz. However, uh, I believe the entire war premium spike completely dissolved by midday yesterday as traders refused to buy on, to panic buying, right? So the bearish drop or the drop was partially limited by a delayed EIA inventory, which showed that the decline of 3 million barrel in US crude stockpile, providing just enough physical demand support to prevent a total price drop below the structural support here. So after the breach of the support recently, or even yesterday, right? We hold our bearish bias unchanged, expecting for the WTI futures to charge lower towards the $85 per barrel. So we remain our stop loss firm at $107 per barrel. Right now, looking at the our local market, the FBM KLCI, right? Well, it faced heavier selling pressure on yesterday's session or Thursday session as investor returned from the midday holiday, causing the KLCI to lose 14.09 points and pull further away from the 1007 level to close at 1684 points. Well, um, returning from the Wednesday's closure, right? I believe the local traders were forced to immediately price in the wave of broader regional weakness across the Asian market, right? So the lack of strong local catalysts also left the index completely vulnerable to the external selling pressure as well. I believe now Also, we are down to the absolute final stretch of the corporate earnings season, and I think the FM are actively flattening their books and keeping cash on the sidelines until the remaining high-profile quarterly results are officially on the table. Yeah, I think if you look at the heat map, the pullback uh, for our local market is loud on the headline DAX. Well, because of the heavy profit taking in the mega cap banks like Maybank, CIMB, public bank as well, right? However, the underlying market structure remains incredibly resilient. You know, the continuous buying in the tech like Inari and also a steady accumulation in the industrial heavyweights shows that the smart money is actively buying the dip outside of this financial sector or the banking sector, right? So talking about the banks, right? Saw that the banking stocks took a breather yesterday, but let's not get panicked, right? Because this is a classic um, uh, healthy rotational that actually strengthen the broader market. So when the banking sector took a hit, take a step back, right? Well, it actually frees up the liquidity, and we are also seeing smart money flowing directly into the other sector. Well, especially like what I mentioned just now, tech like Ineri, you know, leading the powerful multi-day charge for yesterday, right? And well, now talking about our Malaysia trading stocks. So today we have Allianz Malaysia. So the stock is on its breakout formation higher at 21 ringgit and 80 cent level on a strong volume as well. So with that, we expect the momentum to keep bullish and the stock able to propel higher towards the 22 ringgit and 80 cent um, followed by the next resistance at 23 ringgit and 60 cent level. So if the stock to clear below the 21 ringgit support, this could reverse the course and trend lower below the 21-day moving average line. Next, we have Guangzhou. So the stock is experiencing a breakout as well at 96.5 cent level. So if the stock to remains bullish, we expect the price to reach or to propel higher to test 1 ringgit and 2 cent in the coming session with a high volume, together with high volume. And the second resistance is now at 1 ringgit and 7 cent level. So do keep an eye at this 92 cent level for any attempt of reversal. So we got two breakout stocks, which is Allianz and also Guangzhou for today. And for the FCPO market, right, for the futures crude palm oil, where the market extended its gains on Thursday session, edging higher by 0.87% to close at 4,535 per ton as fresh wave of supply side disruption overshadowed the soft export data. Well, a softer ringgit during the session gave local price an extra push, rendering ringgit-dominated FCPO futures cheaper and much more attractive to the for international buyers, right? However, at this juncture, we still think that the 50 SMA will keep the price low after we see the rejection, right? Well, we remain firm with our bearish trading bias unless it's crossing above the 4,700 stop loss level, right? So that's all from me. I'll stop here and pass you to the next presenter. Thanks, everyone, and happy trading.
Yeah, thank you, Aiman. So we have a report on YTL Power third quarter FY26 earnings. For the 9 month period, earnings came in below expectations at about 67 and 68% of ours and street full year estimates. The weaker quarter is mainly due to weaker contribution from the Singapore power segment due to few reasons. Number one, there was a plant maintenance shutdown There was also the stronger ringgit against the Singapore dollars, and also you had to procure about 10% of its gas supply at the higher prices due to a force majeure experienced by one of its gas supplier. Nevertheless, this was mitigated by stronger contributions from the water segments following tariff hikes from both Wessex Water as well as Red Hill. And this also helped to mitigate a weaker telco showing during the quarter due to lower contributions from the Sabah infrastructure project. We have adjusted our FY26 numbers lower by about 11%, mainly to account for the weaker Seraya earnings in the fourth quarter, but we maintain a number for FY27 as we expect the earnings to normalize on the gas supply normalization, as well as the improving margins. Apart from that, the data center contribution is roughly about 100 million in the third quarter, and this is coming from 150 megawatts of capacity that has signed up. Management has guided that it's looking to increase the capacity to about 288 megawatts by end of FY27, meaning June next year, and this is in line with our expectations. As such, we do expect data center contribution in terms of earnings will ramp up over the next 12 months. Apart from that, we think YTL Power also is on the front line to secure a new gas plant project, given that it's already reserved turbines, and the government is looking to build another 5 to 6 gigawatts of electricity demand capacity by 2030. So all in, we maintain a buy call on YTL Power. Our target price is unchanged as respect to FY27 earnings base. We think that our target price is back at 14 times, which is at plus 1 cent division. We think is fair given the improving contribution from the data center as well as stable earnings from the water segment units. I'll stop here and I'll pass on to our next presenter. Thank you.
Okay, thanks, Max. Morning, everyone. Let me continue with results notes on KOL Resources, which has just reported their fourth quarter of FY26 results yesterday. Essentially, results met our expectations, but were slightly below the consensus expectations. Core net profit came in at 439 million, which was down 4% year on year. That's at 100% of our forecast. Fourth quarter marks the first quarter since after 4 consecutive quarters of negative growth. Finally, we saw a positive earnings growth in fourth quarter, and that's mainly driven by a recovery in MPM business following a pickup in the product volume as well as ASP. Essentially, we believe the recovery of MPM business is sustainable given the expectation of better fish landing on improved weather conditions, easing competition with regional supply constraints and higher ASP as there was a reduced fishing quota in Peru, which is one of the largest producer in the world. Meanwhile, poultry business should maintain or in terms of earnings should remain relatively stable as the robust growth of regional operations in Indonesia and Vietnam, rising contributions from branded eggs and favorable feed costs should help to mitigate the impact of supply chain disruptions and some of the cost inflations. In terms of the palm oil and clean energy division, it should be lifted by the elevated CPO price, and PM Green Tech has continued to do well as its water treatment segment is benefiting from the increased focus on clean water access. And lastly, on convenience store division, it is improving after the promotional efforts to drive footfall and the initiative to enhance operational efficiency. Overall impact from the Middle East conflict is manageable at this point in time, thanks to QL's scale of operations and diversified business model. With all this, we look forward to a positive and healthy earnings growth in FY27 after the pause in FY26. Post results, we make no changes to our earnings forecast and target price of 3.94 ringgit, which implies 31 times forward PE or slightly below the stock's 5-year mean. We believe current valuation is depressed and offers an attractive entry opportunity to a proven and quality defensive name. So all in, we upgrade QL to buy from neutral with an unchanged target price of 3.94 ringgit. That's all from me. Thank you, and I will pass on to the next speaker.
All right, good morning, everyone. So today we have a results review for IGM for its full year FY26 results, where core profit was at 332 million ringgit, which were below ours and Street's expectations, meeting only 90 and 81% of full year projections. If we were to look at full year core profit of 332 million ringgit, that was about lower compared to last year's 525 million ringgit core profit for FY25. So, for FY25. So, in terms of segmental performance, PBT of the construction arm grew 27% year on year, thanks to the contribution for accelerated data center projects, which make up about 49% of its local order book. Property was a bit sluggish. Meanwhile, the toll division saw a stronger contribution from its local toll highways, while for the port business, we envisage that one of its key clients, which just completed its maintenance to, have a better cargo contribution moving forward for FY27 after the maintenance has been completed, I think sometime in first quarter of calendar year 2026. So in terms of IGM's outstanding order book, it's at about 14.7 billion ringgit, with about 7 billion coming from Malaysia and the remainder coming a bit from Singapore and also the UK. And moving ahead, they are targeting to secure 6 billion worth of Malaysian projects and 3 billion of overseas projects. And and to attain this, they have about 18 billion worth of tenders ongoing that comprises 2 data center projects, which is close to 6 billion ringgit in value, followed by 3 industrial buildings that they are looking for. So so we think that that would continue to help IGM replenish its order book. And in terms of its value realization initiatives, which is the exit from India, the toll monetization, and the listing of its construction arm, IGM expects the listing of its IGM construction arm to be sometime by third quarter of 2027. And if we were to include all these 3 value creation initiatives, IGM targets a distribution of about 3 billion ringgit in total over the next 3 years, or roughly about 28 cents dividend per share, which translates to about 13% dividend yield. But this is of course hinging on the realization of the said initiatives. So all in, we dialed down on our earnings given that it was below estimates. Derive a new target price of 3.05 ringgit, previously 3.20 ringgit. A key rating catalyst would be if we were to secure anything from the Penang LRT segment 2 project. So that's all from me. I'll pass on the floor to the next speaker. Thank you.
Thank you, Adam. Good morning, everyone. And Selamat Hari Raya to those who are celebrating and celebrate. Yeah, so I'm Vanessa. I would like to share with you some of the US stock warrants that is actually issued by RHB. Yeah, so if you may not know yet, RHB Investment Bank is the only issuer who issues a single stock US warrants. Yeah, so it's actually different from the index warrants that you saw, such as the Nasdaq index and all. We actually had all of this in stock warrants form. All right, so with the names, I think everyone is like very familiar with AMD, Tesla, Nvidia, and Broadcom. So many of you might not know yet, all of these US warrants, they are all listed on Bursa Malaysia. All right, so that's why they are also listed and marketed in Ringgit Malaysia. So you'll be able to see all the bid price of all these call warrants, right? Even though the underlying is USD, but then it's actually listed as ringgit. All right, so AMD C2, Tesla C8, Nvidia C3, and Broadcom C2. Yeah, so it's not AV Go lah, so it's Broadcom. That is the name for this warrant, right? So for this, if you notice, of course the exercise price has to be in USD as well, but the sensitivity will be in ticks too. But you will notice it's like, wow, this is like what, 390 ticks, 691 ticks, right? So this tick size will actually follow the Nasdaq tick size lah. So this is around like $3 to $4. This is about $6-7. I mean, yeah. So that is the flipping point of all these warrants, right? So even though the US market is not open at our daytime, right? We will still market make, definitely we'll market make, and we actually use the pre and post market hours price to actually do this, right? So the big volume means that the queue of the US stock warrants will be 500,000 at each side. But of course, this liquidity depends on the liquidity that is provided by the market makers lah. Yeah, so you can actually refer to the price metrics for a reference to the price. Okay. Yep. So this is an example. AMD C2 actually gained about like 4.9%. This gain actually is just the price differences between the previous closing to the latest the previous closing bid price and the latest bid price for this share, right? So if you are not familiar with the price metrics, it's very common, because this price metrics compared to the local stock price metrics, it looks different. Okay, there's only one level. So you will actually notice the flipping point will be this is actually the flipping point. So when the price was 491.50, then it's actually under this category at 32 cents. And when it hits 495 and 28 cents, yeah, then that will be 32.5 cents. So this is actually the flipping point for all these US stock warrants. All right. So for these are actually for the for those of you for you guys who actually wanted a little bit of leverage, want to invest in ringgit in Malaysia, then if you actually check on the effective gearing 2 times, 3 times, 3.8 times, this is actually the effective gearing, or we call it the leverage exposure, leverage effect that is going to give you through all these US stock warrants. But for now, if looking at it, Tesla C8, Nvidia C3 will be actually quite close to the exercise price. They are both slightly in the money, but then they are still quite close to the exercise price, and the expiry date was still quite long. 24th September and also 29th October. Yep. So if you would like to invest in it, just search on Bursa Malaysia, and then that is how you trade lah. Like you not trade warrants normally, right? So if you are looking at some of the local stock warrants, then you can just go to the RHB warrant website, warrant search function, search on Malaysia underlying, then you'll be able to compare all the local stocks that's listed by RHB Investment Bank, right? So for example, yesterday we actually we saw a search in SCG Berhad underlying. We call it underlying, but SCG Berhad shares. So if you click on SCG Berhad CX, like for example today, you are still bullish on it, you'll be able to see the price metrics. You'll be able to see the warrant specifications, but this one, the exercise price was $1.80 lah. Yep. And also if you scroll down, you'll be able to see the performance, or I would say the closing price of shares versus the closing price of the closing bid price for the warrant. It's actually okay for you to have a reference. All right, so this is what we use for the warrant details function. Okay, so if you have any question, do call us, or maybe you want to send us an email, but calling us will be the most straightforward idea. And yep, so that's all from us today. Thank you so much for dialing in. Happy holiday. There's going to be 4 days of holiday. right? So we will see you at the same time on Wednesday, 8 a.m. RHB Morning Kappa at 8. Thank you.